a fresh 2010 high for the NSE 20, steaming ahead, and many would say that the gains that we've seen really attributed to a lot of investor sentiment surrounding the third quarter results, and of course particularly for banks, so a lot of optimism feeding through into the markets.
Absolutely. The economy, I think, is expected to grow 5% this year. I'm actually erring on faster growth simply because of the mobile price war, which I calculate is injecting close to $100 million a month of stimulus. And it's extremely democratic trickle-down stimulus. And that, I think, will augment and cement and give this recovery more traction. And therefore, I think the market's just responding to that. And we're probably going to see a run up from here of another 10 to 15% into year end. This is a chart breakout. It looks very bullish, and I feel it's a rising tide. The reason the banks are performing so strongly, of course, is that they're the most accurate correlation to GDP. As an investor, it's something you can reach for. The correlation is quite pure, and you're seeing the banks respond. We've had Diamond Trust in new highs, Co-op at new highs. They look extremely bullish across the board.
Well, Aly Khan, do you think that perhaps things are looking slightly toppish on the NSE 20? Some would argue that the NSE 20 has had a very good run this year. In fact, one of the best performing bourses on the African continent. Do you think that we could see a correction down the line if perhaps growth starts to disappoint going forward?
Well, I think what you've got is you've got this point where we're reaching where people are looking at trailing PEs. And on a trailing PE basis, the Nairobi Stock Exchange now looks expensive. As you said, it's been one of the top performers in Africa, if not the top performer. I think Tunis is probably second and Ghana third. But I think on a forward earnings basis, if I'm looking through my models that I'm calculating, I'm seeing some big falls once we turn the year and we get the full year results in. Plus, Eleni, there really isn't that much supply of stock in Nairobi, and I think we have an increasing international macro allocation into Africa. This is a rising tide. We've seen it with Walmart's purchase of Massmart. We're tipping over the radar screen, and I just don't see anyone coming in and selling this market right now. A lot of people are jumpy, a lot of people want to take their profits, but I just see increasing demand, frankly.
Let's touch on Equity Bank. This company set to release results, third quarter results tomorrow, and that's of course on the back of KCB, which released a fantastic set of results. Can we expect good numbers from all the banks?
Pretty much across the board. Equity Bank at the half-year mark was one of the fastest. It was growing its EPS at quite a clip, and I think as long as they've maintained that rate of increase, we're going to see a further rally through this 27 level where there's been some resistance for some time. KCB, as you mentioned, delivered some very strong results. They've made more money in the first 9 months than they made all last year. The forward PE on a straight line calculation is about 8.5, and that looks like a no-brainer for investors. But Equity Bank, high growth bank, very correlated because of the number of its customers to GDP, and now expanding across the region quite successfely.
Well, which of the banks would you be buying into? It seems like it's going to be quite a difficult choice out there for investors with great earnings, high growth coming through for many of the banks. We've seen a number of rights issues. We've also seen banks cutting interest rates. So it really is a race to the top, isn't it?
It is, and I think right now the most value is being offered by Kenya Commercial Bank. It's on a single-digit forward PE. I think the price is at 23 as of now. I put it on a forward PE, on a PE next year of 12, and I get a price of 32, which looks like a 50% uplift to me and looks pretty risk-free. So I'd look at that just because of the risk profile of that transaction. But if you're looking to reach for growth, you're looking for the African growth story, you've got to be looking at Equity Bank. Their transaction with Safaricom, this M-Kesho thing has apparently got a lot of traction. And James Mwangi continues to be an innovative leader in the East African banking sector, which, by the way, has been very innovative with the telecom sector as well, M-Pesa, M-Kesho being classic examples.
Something on the periphery, perhaps, just looking at Family Bank, a mid-tier bank at this point in time, selling 25% stake to a Mauritius PE company, private equity firm. Your view on this? I mean, clearly it is about raising capital. It is about expansion at this point in time. Are we going to be seeing more of the mid-tier banks trying to also get to the top and perhaps start stealing some of the market share?
Yes, I think you're quite right. I think for the mid-tier banks, they have niches that they're playing in, and they're playing extremely well in some of those niches. The two classic examples are DTB and NIC. Family Bank, a lot of people expected them to come for an IPO, but obviously they took the money from, I think, a combination of Proparco and a number of European government-related agencies, whom I feel have felt that they are getting left behind in this grab of real estate in Africa, in particular Kenya. So I think their thinking was, we can get into this at a PE. I think they're getting it at 14, but obviously it's a steep earnings curve. So that's what's looking attractive. I expect a lot more activity at that level, as you said.
Looking at EABL, we saw lots of foreign activity coming through on Friday. SAB Miller's results really showing that EABL doing quite well on the African continent. So this is why we're also starting to see quite a bit of foreign activity coming through. But also keeping in mind, when it comes to the breweries in Kenya, various regulatory reforms that have come to the fore that perhaps could be a dampener going forward. Do you think that perhaps these companies are starting to mutate effectively to the changing environment?
Well, the first thing you quite correctly mentioned, the trigger for this move higher into 27-month highs and about 4% of its all-time high was that SAB Miller earnings release, when people saw that Africa was growing at double digits more than any other piece of the SAB Miller equation. You saw people rush into EABL because it was a pure East African play, high alpha, and that's exactly what drove us through this 200 mark. And we've had an egregious demand-supply imbalance with buyers stacked up, probably about 10 buyers for every one seller at the moment. So I'm expecting new highs. I think, EABL is transformative. For a long time, they were unable to break out of the regional box. They were boxed in Tanzania. They couldn't get out of that. They've got out of that. They're now going to take a big stake in Serengeti. I believe they're sniffing around Ethiopia and Sudan. So I think there's a lot of growth going forward. They are the dominant player in this market, and investors will continue, particularly foreign investors. Beer remains sexy for emerging markets, and EABL is a high alpha play in that part of the game.
Safaricom, a company that has been under the spotlight for some time, and it's really important because it's the largest stock on the NSE 20. Just looking at what investors are expecting from third quarter results, perhaps one of these results that many investors are not really sure about and how they're going to start playing out. We've seen price wars coming through. We've seen a lot of slashing of rates as well, which obviously will be positive going forward, but it's going to have an impact on the top and bottom line, of course.
Absolutely. I think, there's a lot of investor uncertainty around the share price exactly because of this price war blitzkrieg, which has brought prices in Kenya to levels which are unheard of. It's 3 shillings a minute to call the US. It's cheaper for us to call the US. In the information century, curiously, we've had this mass adoption. Now we've got these incredible low prices. It's like a laboratory experiment. Getting back to Safaricom, I think, the price here has the entire voice war baked into it. I don't see any downside risk here. Maybe it goes to 4.90, 5 cents lower. I think investors are going to see in this first half, the impact of the price war was probably for 1/3 of that period in terms of the voice war. But Safaricom really is well positioned in the data space. It dominates the mobile wallet with M-Pesa, which is now acceptable in the supermarkets and so forth. So I think when you look at Safaricom on a PE of less than 12, on a trailing PE basis of less than 12, with its leadership in this data space, I think it really remains very undervalued, and I can see a rally around the half-year mark, earnings release of about another 10% to around the 550 mark.
So in other words, you're buying at 490 shillings?
I would be buying there because I can't see it going any lower. I think it's a risk-free trade, actually.
Aly Khan, in terms of this week's trade, what are you expecting? I mean, any specific stocks that you're looking out for, apart from Equity Bank, of course, which is releasing results tomorrow?
Well, I think, we've obviously got the bank results going to come at us quite quickly this week. I think we had a chart breakout on Friday. I expect further upside traction. And I think into the year end, we're going to be up 15% from here. Nothing goes in a straight line. Reading it from a week to week is very tricky. But overall, this market remains in a sweet spot. It's been in a sweet spot all year. There's been no reason to sell it, and I see no reason to sell it yet.